Hi, I just wanted to share something I've been working on for a while, and it's based on, let's just say, the main inspiration is based on Walter Russell and his understanding of the mathematics of vibration, let's say, and how everything in the universe breathes to certain ratios. So everything will expand and contract to certain ratios. And I ended up basing these levels on the square root of 2, the square root of 3, and the golden mean, which is also kind of related to the square root of 5. And yeah, you'll see a lot of people using Fibonacci levels in trading. And I don't think they understand that there needs to be a balancing. So the retracements are the compression side of the wave, and they're based on a rebalancing of an expansion. And so these levels are based on sacred geometry, and they're the relationships of the square root of 2, the square root of 3, and golden mean within those geometries. And what you'll find is the market, I don't know if it's that the market makers know these levels, and I'm sure they do in some respect, but I feel like they can't work against these levels. They use them to manipulate against, but they can only go so far. I feel like in order for them to profit, they need to rebalance and go back into accumulation after they reach an extreme of a trend, a leg of a trend. When they reach an extreme, they have to retrace, and they use it in a way to maximize profit because they know that this is how things naturally grow, and it's almost like it's an organizing principle of the universe to grow to the most efficient way it can. If you've ever read anything from Dan Winter, his whole thing is about the golden mean is the perfect expression of something being able to compress without losing any, it's perfect compression without losing any information. So a golden mean spiral is the way that the universe can compress itself and expand itself without losing any information. So it's the most efficient way for growth. And this is what these levels are based on. And I found that I can put this onto any week and it will somehow resonate to these levels. So before I actually show you the levels, let's just talk about, I've been inspired by quite a few people. This has helped me understand what I've created here, helped me create a structure to view the market. So if you've ever heard of Martin Cole, I recommend checking him out because he just simplifies what the market is and how it is a business that as a retail trader we are allowed to be in. We're allowed to be involved in their business. It's not really our business, but we're allowed to flow with what we believe the market's going to do. And that's what the market maker does, is they create beliefs. They manipulate beliefs. And the way I view the market now is I'm not looking at price going up and down. I'm looking at beliefs of where the market's going to go, or beliefs of where price is going to go. It's really about, you're not going to get into a trade unless you believe something, unless you believe it's going to go a certain way. And I also have studied Steve Marrow's stuff, who talks about the market maker and how they manipulate around an initial, what's called a market maker spread. So each week, at the beginning of each week, there's a market maker spread set It's not the broker spread, but it's the accumulation phase for the week. So in the market maker business model, you've got three phases. You've got the accumulation, and then the manipulation against that accumulation, and then the profit release. And what they do is the first 2 4 hour, or just let's just say the first 8 hours of every week, they set a high and low, which is the accumulation for the week, and they manipulate around those levels for the week. And they also have an accumulation phase for the day, which is usually the Asian range. But I mean, you've always got constant accumulation, manipulation, and profit release. And so in the accumulation phase, they are kind of seeing where beliefs accumulate. In a way, they end up at the end of their phase they're creating an imbalance. So they want to create some kind of imbalance where there's a bias towards the upside or the downside. And what they're doing is accumulating contracts. So if they have a bias of sell contracts, then the market will eventually go short. It's just inevitable. That it is their business. That this is what the market is, and they'll manipulate against that. So say they form a bias, they'll then try to create the opposite belief. So they'll create a move where it goes against that. So say they're going to go short, they'll create a manipulation phase where the market will go up, and this creates beliefs in the retail traders, usually not only retail traders, I suppose professionals sometimes fall for it, but it'll create beliefs in them that the market's going up, I'm going to buy. And who are they buying from? They're buying from the market maker, who is selling to them. So they're creating even more sell contracts at a better price for themselves. And then after they're done with that, they'll go through the profit release phase, which will be the trend. So what I've found is the levels that I've created, if I just section off the first 2 4-hour bars of this week, let's just go on by. And let's just go over to the 15. So this is the beginning of the week. And so the 0 to 100 is the high and the low of the accumulation phase for the week. And these levels are based on, let's just say you've got wave 1 is 0 to 100, and then wave 2 is 50. So the next wave will always start at the balance point of the previous wave, or the 50% of the previous wave. And then it'll expand out based on the square root of 2, in this case, expand out beyond the previous wave. And then it goes back to the middle of the wave, which is 3A, and then again expand beyond the previous wave, and it'll just do this. This is how the waves are made. So what I expect every week is you've got the accumulation phase for the week, and then there'll be some kind of manipulation against that wave. And for instance, for this week, they if you've got wave 3A here, which is it'll create some kind of psychological resistance, and if it pushes through, I'm going to expect that, okay, this is going to be a long play, at least for the first few days, Because usually if it can't really break through here, or if there's extreme volume, like if you look down here, there's very little volume. To me, there's not a lot of supply there hitting the market at these levels. So to me, there's a long bias. People believe that this market is going up, and the only players that can really create volume are the professional traders. The retail traders, they don't really create much volume. So if it breaks this 3A level, I'm going to expect that this is going to be a long play. But then I'll wait to see, and I'll wait for the manipulation phase. So they'll either, if they push through, they'll either first of all not break 3A, which therefore to me this looks like a short play. But in this case they've broken through, and then they'll manipulate against that. So it's almost like a test to see, okay, are we going to go through this level? And what they've done is they've come back to the beginning of 2A, or the beginning of wave 2, which is the 50. And what you see is there's a lot of volume coming in at the beginning of wave 2, which says to me, okay, this is strong. There's a lot of demand here. And as you see, it did go up. And then as it came back down to the 100, which is the top of the psychological accumulation for the week, you see even more demand come in. I probably would have bought here as well, but what you've seen is they've done another manipulation, which is a stop run. See how they didn't actually come down to wave 2? Like, I know it's 3 pips off or 2.5 pips off, but usually if I see this, I'm thinking, hang on a sec, they haven't really they haven't done their stop run. And then, so as you can see, they've come back down on very low volume. That to me is no supply. There's no effort to push through this support, and they've also hit any stops from people who bought here in this leg here. And what I'd be expecting if I see this is, okay, this is definitely going to at least go to the end of wave 2, which is 2B. And what you see at 2B is a lot of volume coming in, quite extreme, which says to me that's profit taking, really. But to me, these waves are like, at the end of the wave, they've reached a climax of belief, in a way, where you've got a wave of opposing belief, and there has to be some kind of balancing. And you can see there was I don't know, like an hour of balancing, and then what'll happen is they'll usually push the market to the absolute extreme, which is the beginning of the next wave. Well, let's just say the beginning of 2 waves after it. I don't know how to explain that really, but I see it time and time again. It'll come to wave 2, the end of wave 2, which is 2B, and then it'll kind of halter around, maybe accumulate for a bit, and then it'll force its way through to golden mean 4A, which is the beginning of wave 4. And then it'll go into accumulation, which is done here. And what I'd be expecting is a retracement all the way back to, naturally it should be at least GM3A or 3A, and it didn't quite make it here. But what you see is we've had wave 2 complete and some kind of sell-off or supply hit, and then a manipulation. But the way I see it is this is a manipulation of, oh, this is going to continue. I'm going to get more people to believe that this is going further, getting them to buy in, and then going into accumulation. And I mean, this creates a lot of nervousness. Imagine people buying here, and then it just kind of halts and going into accumulation, and then you get it come back to that level and then just fall off again. You've got then you've got after of this accumulation phase here. So this is the balance. This is what people consider balance in auction theory. They consider accumulation balance, which to me it's not balance. It's the creation of imbalance. To me, the balancing of the market is where this supply came in. There's a sell-off. That to me is the balancing of books, and then when it goes into accumulation, it's the creation of imbalance. They're wanting to create another bias, and then they'll manipulate against that accumulation, which they've done here, and continue up, or continue wherever the bias, whatever bias they created, they'll manipulate against it, which they've done here. And what, as I said before, I did be expecting it to come to 3A, which it didn't. It was only 7 pips. But as you can see here, it came back to the end of wave 2, went into accumulation, then they did a quick stop run, and then the profit release. So if I'd be expecting, after seeing this little stop run, to at least go to wave 3B, which it did. I mean, it's like half a pip off. and now it's gone back into accumulation. So this is the next wave. It's the same thing. As in, they had a little accumulation here on the wave, end of wave 2. Here they've got quite a long accumulation, and they've again they've hit the stops, come back to 2B. So accumulation, manipulation. This is manipulation, and I'll be expecting it to go to not wave 4 yet. I'd be expecting it to go to 5A or GM 3B, which it did, like almost exactly. And as you can see, it goes back into accumulation, and 3B becomes kind of a support, or let's just say the lower end of that accumulation. And yeah, now I'd be expecting, okay, this has got to go back to really balance. It's got to go back to at least 4A, which is the beginning of wave 4. And if at the beginning of wave 4, it has to go to, excuse me, at the beginning of wave 4, it's got to go to at least 4B, which at the end of the week it kind of pushed through. 4B to me is like the extreme of the week. If it gets to 4B, I'm not looking to go any further. And I'm not saying that it doesn't. Sometimes there's a reset of the week where it'll just go. I mean, my levels go up to wave 5B, 7A, the beginning of 7A, actually GM 5B. Alright. On extreme situations, it reaches that, and if it goes beyond that, I'm kind of I'm done for the week on that market, because it's just beyond natural levels for me. I don't really know what's going on there. There's been a reset or something. So as you can see, there's a real structure to the week. There's a real structure to the market, and these levels are just for the week. Like you can put this level on just this little accumulation area here, and you're going to get some kind of I'd expect this is probably like wave 2B or 3B of that, just that accumulation. We can put it here. What is it? Okay, wave square root of 3 5A, like to the tick. It's just unbelievable. But this is the structure of the market. It's not random noise. It's mathematical, natural equations. And everything's become digital now, and I'm sure that the market makers, there's not some dude sitting there watching the market and manipulating these levels, and there's a guy who's he's just making sure that their algorithms are running smoothly. Gone are the days where there's a market maker sitting there actually making decisions. He's literally just making sure the program is running smoothly. And I'm sure that they have programmed these levels in. It's just so obvious. It's undeniable. Anyway, I hope that shed some light on how you can actually structure the week. And if you have this, it's taken me a long time and it's kind of why I want to start sharing this, because I've had a hard time keeping this structure in my mind as I trade, because the time really gets to you. You get manipulated by the form of the chart, and you forget about the level. You forget about, hey, there was a strong demand at level 2B. They've hit the stops, and you forget about, hang on a sec, this has to naturally go to the next end of the wave, and it always does. The amount of times that I've got in a trade with this in mind and gotten out early because I saw some kind of intermediate accumulation again on the 5 minute or something. It's just noise. It's just another manipulation for them to buy more contracts and then go to the next level. It's just over and over and over again. So to have this broader structure in your mind and make the trade, put your stop below where they've already done the stop run, and take profit to the end of the wave and just walk away from the screen. That's how I want to approach the market from now on. And I think sharing this with others, and I will be sharing trades that I take during the week based on these levels, will help me keep this structure in my mind, have this broader picture. Because I think where a lot of people fail is just getting caught up in the little ripples and little manipulations within the bigger move, which is it's inevitable. If they've accumulated and then they've manipulated, there has to be a profit from that manipulation. That the only reason that it's happened is for that. It's inevitable. So and it is based on these levels. So I hope it's just blatantly obvious. Like I know I've only shared 1 week, but I'll share another